Hello traders, Jason here. It is Sunday, October 31st, 2010. Happy Halloween. And in this video, I will analyze the S&P 500 tracking ETF as well as a couple individual stocks. So let's get right to it. In my last video where I analyzed the S&P, was a long time ago, forgive me, September 30th. This is what we were looking at. And the call I was making then was either we were going to make a high base and break out, or hopefully make a higher swing low. What we did only a few sessions after that call was break out. So after that breakout, we pulled back to support a tiny bit, but basically rallied from there. Gapped right over this next resistance at 117.70 area, and then well, we chopped through that, took it out basically, and tested 120. Now that 120 is going to be huge resistance because we have this swing right here. If you call that a triangle, that could be the apex of that triangle. Goes back, I'm going to go to the weekly here, and please, I apologize for the messiness of my chart here. But it goes through that swing, the opening of this gap, as well as that swing, and then if you go back to the monthly, the 120 also goes through these areas back here where we took many months to get through. But all that said, 120 is going to be major resistance, and what I would like to see here is a consolidation right under 120 and a breakout. That would be very bullish. Maybe not the healthiest thing. A healthier outcome from here would be a shallow pullback to either 115 or 113.30 or 113.50. Naturally, the shallower the pullback, the healthier, or the stronger the move. But we do need to rest, basically. This has been an impressive rally, but it should statistically slow down and take a break, either a small pullback or a base from here. But overall, I am bullish. I just would like to see a confirmed uptrend as opposed to just a rally. That would come with a nice consolidation or shallow pullback. Okay, let's look at CMG, Chipotle Mexican Grill. As you may or may not know, this I've been involved with this stock for a while. Way back here on this breakout, I got in initially, and then not sure if I added to my position here. I don't think I did, but basically CMG showed relative strength all summer and broke out again, and I added to my position there, and then added a little bit more here on that breakout, and now we have this huge windfall type profit. Breakout well above 200, which is nice to see that didn't act as resistance at all. These are all-time highs, but I could have expected 200 to be sort of like a mental resistance line. And some traders would take profits after a move like this, but that's the last thing I would want to do. CMG is my biggest position and my most profitable, and my strategy basically calls for me to give those types of stocks more room to run. Even with this 60-point stop loss that I have right now, which is huge admittedly, I would be making profit if it pulled back that far. I am looking to move my stop up soon. I just need a nice swing low to put it under, and I don't really have that yet. But I'm just going to be patient with it because this is a winner, and you got to let your winners run. You got to give them room to run as well. On that same note, you got to cut your losers short. Let's look at PLCE real quick. If you recall, I made a video about this one where I made a mistake in that I exited too soon, and I did exit too soon. It broke out from there, but then it pulled back and gapped well past where my stop would have been. I probably would have had the stop up here around 46.50, and right now it gapped well under that. I should have been in that. I should have experienced that pain from doing the right thing as opposed to dodging a bullet for doing the wrong thing. And I'll leave it at that. Thanks.